which is probably well after some of you all. It wasn't sexy, it wasn't glamorous, but in the past, say 5 years, you've gone from zero to hero in many of the spaces, which is kind of interesting. The growth rate, the bottom part right there, between 95 and so in 5 years the growth rate was 78 million people, or the equivalent of a new China every 15 years. And we still can't even get our hands around China. Okay? What are the real numbers? What is the demand? It's all trend. It's all sense and nuances and listening to the vibe. The very interesting thing is the age. And that was kind of discussed yesterday. But you're talking about a very youthful world and a world that's very small. Okay, you can fly around the world in 24 hours. Okay, everyone, the Facebook being the 4th most populated, country, that's crazy. But the age of communication and how quickly that flows. In fact, I would argue, I was doing the interview with Reuters yesterday, and this whole shift of Chinese urban populations going back to the rural, I think that actually will expedite that dietary shift. And again, no one's really talking about that, but I think that is going to be a consequence that comes out of that, is that you did have people living in the cities that have gone back to the rural areas that are going to introduce those new products or those new, hey, this is what we saw. The word of mouth. Don't underestimate it. Again, urbanization and technology, main drivers. Again, this talks about China, but I think the one caveat, again, you have my presentation, but the one thing the market has done very well year after year is underestimate China. Underestimate the growth, so on and so forth. Again, this is I'm a thematic person, okay, when I trade, when I advise. What are the themes? Okay, and let's build strategies around that. What are the returns? What do we see coming up the pipeline? These are some of those India and China thematics. Again, those are in your handouts. I think globally, for 09, 10 certainly, and going forward, politically, we did see the cause and effect of trade barriers, of export bans, of import subsidies. I mean, we saw it all in 07, 08. We saw a little bit going into 08, 09, but let's take the lessons there. I think probably on this one, the most important one politically will probably be India. Okay, they were going to first allow export, wheat exports, that they have now banned that. What do they do on veg oils? What do they do on sugar? What happens on the oil seed? How much meal is going to come out or not come out? What does that food security feel like? The rice production is going to be the lowest since 2002. What's going to be the impact of different sectors of that? So India probably watching on a political side, and certainly Argentina. Certainly Argentina. Competition for capital. Okay, credit markets have seized up. The 44 to 47 trillion of wealth lost. There's just less capital, and there's more projects, different projects competing for that capital. So you could almost argue, and it's something that I'm working on, but I do believe that we had an opportunity to really invest in agriculture, okay, to prepare ourselves for this 2015 and 2025 and 2050. I think we've lost that opportunity. I don't know when it finally catches you, in the Achilles heel in terms of consuming versus producing. But I do think we have lost an opportunity to increase production in some areas. So we'll see how that plays out, but it's just something I kind of keep in the back of my mind is what were the missed opportunities because of the financial crisis in addressing these production needs ultimately. Okay, China, the one thing actually when it comes to China, I think what's interesting when I look at China in terms of soy, China is not the world's price maker at all. That's not how I view China. I think China is a price taker. Their demand is so massive that they take whatever they need at whatever price, in theory, because the appetite is just that massive. Okay? And rather, what's very interesting, I think, with soybeans is it's the supply side of the equation that is the price setter. Okay? It's the supply side of the equation. The re-rally began because of the Argentine drought. Okay? The support that we've seen in meal, and we've even seen, that I don't think she really wants to go below that 917 level. That's because of the supply side. So that's something, when I look at soy as a trader, what is my supply side? Because China's there. Okay, what is the rebound going to look like from other importers? So something to maybe keep in mind. Weather, that's Australia, Argentina. Do we see an El Nino? What do the subsoil moisture levels look like in Argentina? But again, when I look at Argentina, I'm much more concerned on the draft side. How are you going to get that stuff out of the country? Economically. Rising production costs and diminished profit margins. That's probably more on the raw product side rather than the finished product. If you talk to flour millers, they're having a great year. Great year. I think actually margins in general from a finished product side is actually quite decent because your input cost has dropped so dramatically. And the cost of the finished good, yes, it's retracted a little bit, but not to the degree. And certainly if you see the stock or the equity performances of the major food companies out of the U.S., that emphasizes it. The Krafts, the Nestle's, that type thing. That is, so it's a great to be a processor. It's great to be in the food sector, and so on. Market volatility, it's going to get worse. Before, this is just, we're in an entirely new period. And it will get worse, I believe, if the CFTC continues to go the way it's going and we drive out liquidity. That is the worst thing that could possibly happen. If you drive out liquidity, you do raise volatility. Investment in agriculture, there's a lot of interest. People are looking at that vehicle and what do they want to do. But again, it's a bit of a problem because you have other entities competing for that capital. Active advising, active management, that is something you're going to see from the hedge fund and from the investment side of it. The long-only index type, the long-only strategies, a lot of people got burnt, obviously, because of that. So that should, again, contribute to a more commercial type approach with spreads, trading crush, reverse crush. Again, a lot of these guys are doing intra-commodity spreads and looking at different ways to invest that are actually probably more commercially related than just buy and hold type strategies. So that too, on paper, you just got more competition from the fundamental side. Latest projections, again, nothing glamorous there. Soy impact, I've given you my synopsis on soy. Again, you can kind of read through what I've written, but I think the interesting thing, especially when you want to talk about meal, the fobbing capacity out of the U.S. is really primarily plugged up with soy and corn right now. I think that will be interesting as it impacts the meal market. And especially coming out of the PNW, we're going to see, John and others have commented, we're going to see exactly what the U.S. can load out. How much can the shuttle trains push out to the PNW? What does the barge system hold? This is going to be really interesting as to what the U.S. can or cannot do. World